in listen-only mode.
Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus is on strategy in this live webinar where we take a look at the Forex market and perhaps some other instruments. First of all, though, be aware that this webinar is shown to a global audience yet may not be suitable for everyone. Take a look at this link, select your country of residence, and contact the appropriate entity to find out more information about that. Also, trading for exchange in global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. If by continuing watching this webinar you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, so we're going to take a look at first of all, at the Forex market, and we can do that already without even launching MT4 because you can just go to trading platforms, click on MT4 web trader, and you click on launch, and you'll be able to access the markets in a matter of seconds, in fact, and you can see what's going on right there, right then. Now, there's another option, of course, and that's using the Metatrader 4 or 5, and if you use 4, you can even have the option of using Supreme Edition, which is a plugin that basically adds extra trading experience, as it's written here, and there's a lot of extra things, 60 plus, and you can test that for free for I think a month, even when using a demo. So you can check that out without any obligations. So take a look at that. Of course, on the website also a lot of information about analytics and education, and that's what I'm going to do right now. I'm going to take a look at the calendar and see what's going on. We have pound news later today in this morning. And we have a big news event on the FOMC. So that's, and some other lighter news, as you can see. All right, regarding volatility, no, that's the wrong one. Let's see, there it is. The top movers, let's take a look. This seems to be a copy of yesterday. Let me see if I didn't refresh by any chance. 1 second, and then we'll take a look at the live market. Do you see and hear me properly, by the way? Is everything okay from an audio and visual point of view? All right, it seems to be the same, but, or maybe it's not refreshing. Let's see. Maybe I have too many programs open. There it is. Somehow there seems to be not much difference with yesterday. Anyhow, not sure if it was renewed. Let's take a look at the market. Great, thank you for the confirmation. So today I want to take a look at yesterday's analysis as well and see how that is playing out right now. I also want to take a look at the strategy I mentioned yesterday, and for those that joined, who didn't join yesterday evening by any chance, so that I have an idea if there must be some, I guess. So I'll just repeat that quickly, and we can take a look at that. All right. So this is the pound USD right now, and we had a break to the downside instead of the bounce to the upside. Well, we had a bit of a bounce, but we didn't get the second bounce. We only got one of the bounces. One of the bounces was here before the news event, and it reached resistance. And then I was expecting a second bounce to the next resistance, but that didn't happen. Instead, it broke support, and it fell right to the trend line we had on the chart yesterday. So there was that space from this trend line to that trend line. And now it seems that we're breaking the next trend line. So this could be, definitely getting into bearish territory with this break, specifically with this break. With this break, obviously it could have been bearish territory, but it could have been a correction as well, like this. With this break, I would say we're getting definitely into more bearish territory. But from a discretionary point of view, there could have been a breakout trade on a 50-minute chart, not an hourly chart. Well, even an hourly chart, there could have been a breakout. But mind you that this correction basically, according to the strategy I mentioned yesterday, didn't pull back to the 21 EMA, right? So from that point of view, it didn't correct deep enough or long enough. So I'll talk about the strategy idea that I mentioned yesterday in the webinar in just a second. But basically, we had a break of the flag, this either triangle or bear flag earlier this morning. Now, I'm not a big fan of trading breaks on the pound USD just before the London session, so I didn't trade this just because of the fact that I'm a bit superstitious about trading pound USD maybe that early. So you will not see me take this trade. But in theory, if this were, let's say, a different time frame, a different chart at a different moment, in theory, that could have been a good breakout, right? And it still could be a good breakout. It's just the timing of such is not a real great one, in my opinion, especially with a news event like that coming up. So there's my euro dollar. It moved all the way to the end of the file. Let me get that back to left side. It was properly prepared, actually, at the beginning of the webinar. But I closed Metatrader because the websites, sometimes Google goes a bit slower if I have Metatrader 4 open. Probably have too many indicators and templates on it. So I closed it so that I can see the market heat map, and then when I reopened, my euro dollar shifted all the way back. All right. Anyhow, euro dollar, so once again, just to help you with the focus here, I'm going to take a look at the majors, see what we said yesterday, and then dive into that strategy. Okay, so first of all, some analysis. The euro dollar basically bouncing off the 382 point fib, right? And that's something we considered yesterday, any of these fibs to be a potential bouncing spot. And price still hasn't broken the 38.2 fib. It's still hanging around there, still bouncing at it and not able to break it. So that could be, although yesterday it seemed like we could maybe potentially head, if we break below this bottom, head to the 50 fib and then perhaps to the 61.8. Price didn't manage to break through that support level. So we don't have that move down and we're getting a bounce instead. So I think that there could be a bounce trade from the 38.2 fib, but I think we need to break above local resistance here, see a bit of a pullback, and then there could be an upside to retest this top, and perhaps a bit further and higher, and perhaps go up to the minus 272 target, up around 115.50. So there could be some upside trades, I would say, if price manages to break above this resistance. I would expect price to hook back and then bounce and then perhaps continue. So I'm not in a rush to catch a breakout here. As you can see, the 21 EMA is bearish. So I'm definitely not in a rush to trade it to the upside. What I would like to see is price break above the 21 EMA, hook back to the 21 EMA, use it as a bouncing spot, and that's the trade I'm actually interested in. So it's going to take some time. Some things have to develop before I think that becomes interesting. All right, but the potential for a bullish trade is there. Also, if you look at the moving averages, 21 EMA is above the 144, so those things are, those two are bullishly aligned. It's just that price is below 21, so it's retracing. So if it then breaks above 21 EMA, we have things aligned. We have price above the 21, 21 above the 144, and that's a perfect with the trend setup right there, up to retest the top or to the target. So that's something interesting. Now, if it does break through this support level, it still could happen. We might not break this resistance, bounce off of it, and start breaking that support level. Then there's a space down to the 50 fib and the 144 EMA and the weekly low and the 110-ish psychological level. And there could be an intraday potential to fall, and then I would expect a bounce at this fib, and if it breaks through that fib, then the next fib. Still the same as yesterday. All right. So dollar yen, excuse me, talked about the short potential yesterday, and that trade is doing fine. It's moving our way. There were a couple of ideas. One was basically a pending order anywhere in this zone, right? One could have been an entry, for instance, right, we were talking about it yesterday, a market order right there, right then. That could have been one way of doing it, or a pending order, all in that zone. The other idea could have been another pending order a bit higher. Well, price didn't get there, as we know. But we also talked about the fact that a 4-hour candle that is breaking below 114 and closing near the low could have been a signal to go short as well, indicating basically the price is bouncing off this zone. And we got that yesterday. So there are a couple of ideas that worked out well. The pending order or market order right in that supply demand zone right here. That's doing well, depending of course, where you exactly entered. Could be anywhere around 100. And then they bounce off the support level. So instead of taking the trade right at that zone, the other idea was to wait for a price reaction at that zone. So instead of anticipating the price will bounce at that zone, wait for price to actually show that it's bouncing and then take the trade. And in that case, when you wait for price to react to that level, obviously you have more confirmation that this particular momentum to the upside is finished. This channel is broken when a 4-hour candle breaks through a channel like that and a trend line like that, and breaks also through these lows. There's more confirmation that indeed the momentum to the upside is over. That's history, and we might be starting a new leg to the opposite direction. So what I was looking for is a 4-hour candle. Remember, that was below 114 with a close near the low. This is a close near the low, check, and it broke below 114, check. So that was the entry candle. If you had, let's say, even more patience, or you were even more demanding in what you were looking for, then you could have put a fib on this candle. That's always an option as well, and look for the 50 fib retracement or 38.2, and you might have gotten a tad better entry there at a bit of a discount. Now at the moment, price is falling. We see some dojis, but basically this was the main candle, the dominating candle there. Didn't get broken, and we just had some smaller candles, and now the bears are slowly but surely taking back control, and we're getting a lower low at the moment, and we already have, or close to having a lower high. So things are going our way. It seems indeed we're getting the turn. You can see the 8 EMA turned here and is back bearish as well, and slowly the 21 EMA is also becoming bearish, and we're getting things in our way, especially if this candle closes strongly bearish and closes below the 21 EMA. I think the trade is working and looking very nicely. I think we can move the stop loss after this candle closes to above this high, and potentially reduce the risk by a bit. I'm not sure how much. It depends where you have the stop loss and the entry exactly. Great, Beverly joined the trade. Did anyone else take this trade by any chance? Current candle is definitely looking strong, and I hope it closes like this. And yes, I think managing the stops on a 4-hour chart is fine. It's good, and we can use fractals on a 4-hour chart without any problems. Now, if it gets lower, if it starts to, let's see, if it dips below here, right, and then starts to retrace, and the 21 EMA is already like this, for instance, I might even move it to break even and just put it above the 21 EMA to get the risk off the table. If it then continues, we should have a new fractal, and I can move it again further above that high. And I would say once we get into a position where prices anywhere where you're up 2-to-1 on R2R, reward to risk, you could think about even using a tighter stop loss. What moment you choose to use a tighter stop loss, right, is something you have to think about. But you might even wait, show a bit more patience perhaps, and start tightening the the trail stop loss when price gets close to the target, to 110, for instance. What I mean with tightening the trail stop loss could be using recent 4-hour candle highs, could be zooming into a 1-hour chart and using those fractals, or even 1-hour candle highs. Obviously, the chance of getting knocked out becomes greater and greater. But that's okay. Basically, you're trailing the stop loss tight because price is getting close to the target. So we don't want to give back too much profit if the market reverses against us. So we're locking in more and more profit as we get closer to the target. And I think that I like that system, so it makes sense to me. So basically, the idea of this trade management in general is, let me get rid of this fib. Is to give some space to the trade. Obviously, when we just enter in this candle, you can't expect that price is going to fly right away in our way. Got to give it a bit of time and see how it develops. And then when it does show that it's moving our way, we can reduce risk. And then later on, when it really pushes, hopefully pushes our way, right? It's just anticipating that. And talking through that, we can move it to break even, take all of the risk off the table. So basically, as I already said once in the trade management webinar, patience at the start, then become tighter to reduce the risk and move it to break even. Then we can become patient again because we have it at risk free, so we can try to get a bigger winner. And when the trade then moves our way again, then we can tighten up again to lock more profit. So it's that kind of like up, down, in a way, patient, tighter, patience, tighter, right? From that point of view. So now we're getting close to, the phase where we can start, moving in and getting the risk off the table. We have the risk reduced now, or almost, I should say, because we're still waiting for, I would say even now, but this candle technically has to close still. And then the next phase would be when we get a push like this, and we can move it to break even. If you look at my candle rule, by the way, 5 to 6 candles not breaking a high, you can see that this was a momentum to the upside. Why? Because we had bullish candles. The bullish candles were in the majority. We had the bearish candles that we see are small and insignificant. We see the bullish candles with a close near the high. We see strong bullish candles. So that was momentum, classical momentum to the upside. And one of the things, of course, that indicate the end of it is not only a break like this with the candle like that and the 8 EMA turning, but also 5 to 6 candles not breaking this high. So if you count that, 1, 2, 3, 4, 5. 5 is a doji, 6 is bearish. So if you use the time factor rule that I apply, then this could have been the entry as well, by the way. That could have been a third or fourth entry, depending how you look at it on this dollar yen reversal. But let's see, nothing is a done deal yet. Who knows? The market is the market, and it could go this and all of a sudden do that. You never know. But so far, so good. So let's see some questions, and then we'll move on to some other currency pairs and then talk about the strategy. Yeah, Kuram, the 3 EMAs you see are 21 EMA close, high, and low. So they're all 21 EMA, but they have different oh, you don't see it here. Same period, but different applied price, basically. And if you're interested in that, feel free to write me an email at this address. There we go, finally. And I'll send you to anyone who wants that. I can send this indicator, no problem. All right, Roger's talking about 1 hour. Beverly says that she likes the trade management. That's great. And Beverly also says your candle row would have indicated entry and at the same time, let's see, entry and the same time. I'm trying to think. Yes, this indicator is for free. You can, these moving averages, I will send to you without any obligation. I just need to know if you're interested by sending me an email and I'll send it to you, no problem. More or less the same time. Cool. You entered maybe around the same time as the 5 candle row. Cool. Nice. Let's see. Take a look at the 1 hour chart. Roger's talking about the 1 hour chart. And we could have had a 1 hour entry here. We had a pull away from the moving average, a pull back to it, and then the first turn was here. And we don't have that many candles below the 21 as yet. But if we get a couple of candles moving away from the 21 EMA, and then a pull back to it, and then a turn, that could be a 1 hour entry again as well, indeed. But at the moment, I would say the 1 hour already had it, and now we need a bit of a thrust and then pull back, and we could have another one indeed. All right, pound yen, basically the same thing, identical. Now it technically did push through the line level I had in mind, but it was only by a few pips, so questionable if anyone took it. But the 4 hour candle did look good, so I would still say that anyone who did take it, that's fine. I mean, it is a good candle, and I think it shows certainly a good signal of a reversal, a strong message to the market that, hey, this upside, I think it's over. It had still like one more little break of this high, and it totally reversed. And I think a hammer like this, I think it's a hammer. I'm not sure about these names that much, but definitely showing the weakness here for the upside and the potential to reverse. So that was a good candle. So if anyone took that, great job. If not, no problem. There are other things that are happening, and we're getting a good momentum to the downside. I think we can use this fractal as well to lock in some profit right there. And well, what could it be? 163, 70, 60. Locks in already about 100. Now, of course, the stop loss was about 160 as well, so it is a big risk. But we're looking at a 4 hour chart, so on the pound yen, so no wonder. And this trade is also moving our way nicely. All right, euro yen did the same thing, in fact. Looking for a 4 hour candle, strong 4 hour candle, all the same type of setups, in fact. Break of this trend line, that could have been a good entry too, and I don't think, we don't have a fractal, but I think moving it to break even right around these tops still makes sense to take the risk off the table. Yesterday I didn't like the odd USD too much, so we didn't really talk about anything. All right, the euro pound didn't go anywhere, and actually big wick here started to reverse to the upside. Thinking if, oh yeah, the pound out, unfortunately, maybe my trade management was a bit too tight on this one because it got wicked out and still seems to continue, so that's unfortunate. That's a pity. Let's see, otherwise, what else did we talk about yesterday? I think we talked about New Zealand cat. Price didn't really get to the target and is already bouncing. Now, personally, I think it does have kind of the feeling of a maybe a bear flag, but it could be a channel too. So let's see how this goes. If it does break, obviously we got a good chance of continuing to the target. But if it breaks above this resistance level, then the tables could turn. So we'll have to see how price responds to these resistance levels. All right. I think that's it. I don't remember talking about anything else. Pound odd, let's take a look at that. And then we'll take a look at the strategy I mentioned yesterday. There we go. Pound odd, short from 204.75. Wow, that's great. That's way up here. Hold to 109.70. Well, it's okay, but I think that if 30 pips below that psychological 2 level, I might personally, if I were you, go just above it. Or if I were myself. I am myself, but I'm talking nonsense. If I were in your situation, then I would go above 200. Let me put it that way. That makes more sense. I mean, it could go below 200, but I think it's just a tad risky because of that. A great trade. Let's see, CAD yen. Awesome job, Beverly. Awesome job. So let's take a look at that CAD yen. All right, we got the 8 EMA turning right here. 21 below the 144, so good downtrend on the 4-hour chart. Daily chart, even everything aligned. Can't ask for more really from that point of view. All right, 1-hour chart. You can see already indeed everything aligning to the downside. Got a couple of candles below the 21 EMA. This could have been one of the 1-hour setups as well. Somewhere here we had a 4-hour setup. And we can maybe even look at the 50-minute chart. Let's see. Yeah, if the 50-minute chart, I mean, this could be a break pullback continuation. That's the break right there. And we might see something like this. So let's see if price manages to get the 8 EMA up and then down again. That could be maybe one way of a 50-minute entry. Or if it retraces deeper and then turns again, it could be another 1-hour setup like we had here. So let's talk about that setup first of all, actually. It's time finally to explain this. So yesterday I was explaining that I used the 4-hour chart as an example on the pound yen. Let's go there. Yeah, great job, Roger. Looks very interesting. I agree. So the idea is basically price to be below. Let me get rid of these long-term moving averages just for a second, not to confuse things. The idea is that price will be below or above the 21 EMA. So the 21 EMA is giving the trend. Okay. So in this case, when the EMA is pointed down It's orange, so it's 21 EMA is bearish. We're in a downtrend. That's simple. But what we're looking for is basically to trade pullbacks. But we can only have a pullback, obviously, if we have some type of momentum pushing price in one direction. So not only do we want to see a bullish or bearish 21 EMA, but we also want to see a couple of candles moving away from the 21 EMA. I talked about 5, preferably 5 at the minimum. The more the better. If we got 10 or more, it's great. If you have 20, wow, well, it's a very strong momentum. So the advantage of having a lot of candles below the 21 EMA or above it is the fact that price has kept moving away from the 21 EMA for a series of candles for a substantial time. So when it does that, it's showing momentum, because if price is moving so fast that it's not even touching the 21 EMA, well, then it shows a lot of strength. So that's what we want to see. Because if price is repetitively touching the 21 EMA, well, then it's not as impulsive. So we're looking for an impulse. Then we're looking for price to get back to the 21 EMA. Let me show you an example. Here, for instance, right? Here, we have 21 EMA bearish, and we've got a lot of candles here below that 21 EMA in that green circle. That's step 1. Step 2 is for price to get back to the 21 EMA as a pullback. All right. And step 3 is that the 8 EMA turns bullish in a downtrend or bearish in an uptrend. It goes the opposite direction and then turns back into the direction of the trend. The first candle that does that. All right, so that's step 3. And the first candle that does that is this one right here. So what we have is basically momentum, pullback, continuation. All right, so this more or less turned into a break-even trade when trail stopping these fractals. Entry was here and trail stop was just a bit above it for a small loss. All right, in this example. But basically this is the idea when the 8 EMA turns bullish slightly and then again bearish with a downtrend, obviously. The stop loss would be above the candle high or above the fractal, depending on how you want to manage the trade as well. And take profits is very flexible. I don't have any specific rules for that. I just use my discretion. But fibs make sense. Fib sequences make sense. Pivots, weekly pivots, for instance, on a 4-hour chart, or if you use a 1-hour chart, daily pivots. All of those are good ideas. So let's take a look at another example. This is the dollar yen, actually. So yesterday I was showing the pound yen. And here we got some good examples. All right, here, for instance, this candle could have been 1. And here we got a good thrust. So here you got a lot of momentum, and then price is going back to that 21 EMA. Right here, a lot of momentum. Price hits the 21 EMA, the 8 EMA turns. So we're waiting for the first moment that the 8 EMA is turning back down, and that's this one right here. So that would have been the entry. Momentum, pullback, continuation. All right, so that would be the entry right there on the close of this candle. Now this one didn't have any turn of the 8 EMA, so that technically didn't qualify. Then we got a good thrust again. We get price hitting the 21 EMA, we got the 8 EMA turning, and then the 8 EMA again aligning with the trend, and boom, that's another entry. And here again. And here again, and here again, and here again. So these were a couple of good examples. Obviously, it doesn't always work out that smoothly. like this. Now, a couple of things to be aware of. Divergence, obviously, if there's a lot of divergence, a setup like this is less valuable and could run into some problems, might even turn into a loss because there could be a bigger reversal or retracement. Second of all is the fact that if you add a 144 EMA, the best setups with the trend is when the 21 EMA is also below the 144. These are great setups, in part also because everything is aligned. All right, so from that point of view, there's a double confirmation to the downside. But if price is above the 21 EMA but below the 144, it could still be a good setup, like this one is here, for instance. Right here, price is above it, goes back to it, and then bounces off of it. Just be aware that it is an upside trade that is below the 144 and therefore belongs to a bit riskier category, a reversal category, compared to the downside trades when the 21, because the 21 is below the 144. In this case, the 21, in this previous case, the downside trades with the trend clearly. In the upside example, we're trading it partly as a reversal to the 144. It is above the 21, but below the 144. Also, you want to be careful. Obviously, these are great setups when the 21 EMA stays bearish like this. That means that price is moving back to the 21 EMA, but it's so corrective and so weak that it doesn't even change the angle of the 21 EMA. In some cases, the correction is deeper. For instance, here. You can see that this correction went deep enough to go above the 21 EMA and change the 21 EMA coloring and an angle. So when this happens, it's a bit of a discretionary call. Could be good to skip the trade when the 8 EMA turns back down right here. Or perhaps from your analysis, you know that yes, the 21 EMA slightly turned up, but overall the trend is still strongly down and therefore I like the trade. Or you might think, no, it's too indecisive, I might skip it. When the 21 EMA does change color, does change angle for a couple of candles like this, it becomes a bit of a discretionary call. Whereas if the 21 EMA stays in a downtrend, stays bearish, and price really just hits the 21 EMA, like here, where the 21 EMA doesn't change, those are typically better setups, right? That would be the setup candle right there. In this case, both did pretty well, but on average, the one where the 21 EMA doesn't change is a bit better than the one where it does. And the one where the angle changes requires a bit more caution. All right, so and in this case, you can see price kept pushing above it a lot, and the turn came here. Now, especially if price is close to the 144, that's another reason to be a bit more cautious. Right, but if it's far from the 144, far from it, well then that's actually a good reason to still trade with it. Now in this case, it's a bit different because not only did price change the 21 EMA angle, but it actually price moved away from the 21 EMA. Do you see the difference there? Do you see how price pulled away from the 21 EMA there? Do you see that? You see that 1, 2, 3, 6 candles did not touch the 21 EMA above that band. Compare that to here, where price was still touching it and nothing really escaped it. Or even here, we had a couple of candles not touching it, 3. So that's the difference between why that could still be a good short, whereas this would not be a good short. Because not only did the angle change, but it changed for many candles, plus we had a significant momentum above it, changing the whole environment here. And probably we had divergence, I would reckon, as well. But yeah, probably had a good observation. The AO also showing a lot of momentum here to the upside. Whereas here, not so much. Good point. So those are a couple of things. When the 21, 144 EMA are hitting each other like that, that could be another reason to be cautious, because that means that price is in a transition or it's in a range, and you might want to be just a bit more cautious when that happens. As you can see, one of the better setups is just when price is trending away from the 21 EMA like this for a couple of candles, makes a short little pullback, excuse me, like this, where price hits the 21 EMA, the 8 EMA changes just briefly, and then boom, you get a candle like that. Those are just great setups because the 21 EMA doesn't change color. You got the EMA is aligned. You have alignment. You have 21 EMA staying bearish. You have a small pullback and quick continuation. Those are great. Those are the best ones, but doesn't mean that the other ones are off the table or bad. It just means that we have to be a bit more cautious sometimes. In this case, yes, the 21 EMA turned bullish for a couple of candles, but we have things to see that it was still a good short. Why? Well, first of all, 144 EMA is far from the 21. Price did not escape the 21 EMA. It didn't manage to break above it. And it's only a couple of candles as well. So from that point of view, I think there was still sufficient animo here to say, okay, that's a good short. Maybe not as good as here and here, which fit the bill even better, but still good enough because of those factors. So the bear system is 3 steps, requires 3 steps. Candles moving away from the EMA, 21 EMA. Candle going back to 21 EMA and touching it. And then the third is the 8 EMA turning to the opposite direction and then again with it. But as you can see, additional factors to think about besides these 3 rules is basically the relationship of 21 versus 144 EMA. How far is the 21? Is the 21 touching the 144? Basically these 2 things. That's one thing. The candles versus the 21, right? And the angle of the 21. All right, so 21 versus 144 EMA, the alignment and distance. Okay, that's an extra thing to look at. Then we have the candles, right, versus 21 EMA, and if there's a break of the candles or not. In this case, we didn't. Price stayed around the 21 EMA, didn't push above it. That's one thing. That's the second thing, sorry. And then the 21 EMA angle and how many candles. Now, obviously, there are other things you can think about if you like looking at the daily chart to see if there's divergence, right? We talked about, but you can look at the daily chart and obviously see if there's some strong support and resistance levels you might want to consider. But we can then dive into too many details. If you like doing that, fine. That's great, and it does make sense to look at the bigger picture and see, is there space for trade and stuff like that. But don't want to overcomplicate things here. I think that in general, this idea can be used on all time frames, but I do want to give a bit of caution on lower time frames with the fact that News events, of course, can impact price a bit more. Obviously, we have a bit more fluctuation and volatility, I think, on those lower time frames. So you want to be careful with that. Also, I think that if you look at momentum on the lower time frame, you want to have more candles below the 21 EMA. So whereas I use 5 for a 4-hour chart, 5 for a 15-minute chart might be a bit might be too little. Maybe good to be a bit more demanding. So let's take a look at the 15-minute chart actually. All right. So here, for instance, we had a very good momentum. Obviously, price didn't touch the 21 EMA for many candles. That is a good momentum. Look at that, all the way 40 candles. Well, that's fantastic. And if you have that many candles pushing away from the 21 EMA, right? In that case, it's a significant and strong momentum, very powerful. You can see the AO showing that, reflecting that, and then going back to the zero line. That means that this is the retracement of this move down. And then what does that mean? Well, after the retracement, we can have the trend continuation, can't we? So what are we looking for? Well, we can see if we use the same kind of rules that the entry, first of all, would be here. The 8 EMA is changing here, and here's the second one. So 2 entries. Obviously, the first one, as you can see, could have been in a bit of a trouble, especially if you use the nearest fractal. And that could have been a loss if you put it at 53. Would have just got tagged out. If you put it at 57, you might have survived. So a 50-minute chart, can have that as a complication. That's why sometimes using a 2-candle rule could be good too on a 50-minute chart. 2 candles basically in our direction. So that would be this one. Sometimes a bit more confirmation or a bit more spacious stop loss might make sense. Now, even if the first one ends up in a loss, if you take the second, then that would compensate that. But the point is that you do see that basically price, after a strong momentum like that, did get the follow through on the 50-minute chart too. Now, if you look at these candles, if you look at the extra requirements, right, 21 very clearly below the 144 with a lot of distance. That's fine. You do see a couple of candles above the 144, above the 21 here. So that could be maybe one reason to say, okay, I'm not taking this one. I would rather wait for a second candle. But here you don't see the candles escape the 21 EMA anymore. So the second one could be a bit better, therefore. All right, so that's a detail. And what else? Obviously, we had a bullish angle here, but I think that's okay. Considering the strength of this downtrend, that's fine. So I think that this is a clear retracement, and I think shorting that retracement is fine. I don't think that there's anything wrong about what this retracement and therefore dangerous to trade. So that could have been a good example of the 50-minute chart. Another example could have been actually here. We got a couple of candles below it, but not that many. But still, I think sufficient. We are talking about 8. It's a doubtful one, but this one did work out. You can see the short right in here. The 21 EMA didn't change, and we got the continuation pretty fast. So I think it can work on all time frames. You might want to be a bit more cautious with the 50-minute chart. There was a setup here, a setup here. This zone is out. That's choppiness. Now, mind you, when price does this, what happened here? What is the difference between this and this? Obviously, 21 EMA is bearish. not only for 4 or 5 candles, but a significant amount of candles. Let's take a look. 17, 16, right? Big difference. Price didn't really escape from it, but it remained below it for a while. So the difference, I mean, it's not that it's impossible to perhaps trade. There could have been an entry here when the 8 EMA changed and here. But there is, I just want to show you that there is a significant difference, whereas the second area you might want to be more cautious. Now, this is not even an entry here. Not an entry. Why? Because the candles didn't escape from the 21 EMA here. So this is not a momentum. This is therefore not the pullback that we're looking for. Same here. Correction because price didn't escape the 21 EMA. Same here. No entries here. This is a spike and not a momentum. Why? Because we didn't have any candles escaping from that. All right, let's see if we can find some more examples. Okay, first of all, we need a couple of candles moving away from the 21 EMA. In all of this area, honestly, we didn't have it, right? Price couldn't move away from the 21 EMA. Now we had a short here, and that could have been a loss because we got a pretty big spike. Now that spike, I don't know, could have been a news event, therefore might have been not a trade, I don't know. But we did have a setup. Let's see, we did have a setup here. Momentum, pullback, continuation. And again, potentially here. This one is starting to become a bit more doubtful because we didn't have that many candles below it. Here we had a good run. And here we got an entry, and that worked out fine. So I think it could work out, as you can see, in many cases. It's just that you got to be more careful with news events, as we saw some spikes. And let me see if I can find one more example. I would be giving you advice that you got to be more careful with, I would say, the first turn. Like, I would say this is probably the best example right here. This could happen more often on a 50-minute chart. All right. Any questions? Let me see. I got some comments here. Let's see. Beverly's referring to a setup that worked out well, and then Roger's saying that he's out of a trade. Trend has changed, making new higher high. Which pair was that? Just curious. Yeah, that's the indicator that I use indeed. That changes the color of the EMA. And I thought you had that. I thought I sent it to you, but maybe I didn't. So if anyone's interested, once again, you can use this email. Just send me an email. You can get this indicator that changes the angle of the EMA to bearish or bullish, so it's easy for you to recognize that. Aaron has a question. Why is it useful for me to have 21 EMA high, low, and close? So the reason is that I get a zone of price action or a zone of levels that I would like to see basically price use. It's not one specific spot. So if I only use one EMA, I'm looking for one specific level. Whereas if I use three, it becomes very clear to me visually that it's not necessarily one area, but rather a zone than one specific spot. So in this case, for instance, this was sufficient. This was sufficient, but also this is sufficient because I know it didn't escape the 21 EMA band. So it gives me more kind of vision about what is still a good pullback. Even if price reaches the lower part of the band, it's for me enough. Whereas if I only have one EMA, I would think that price missed the 21 EMA close. If it goes above the 21 EMA close but hits the high, I know that it's still within that range. Whereas if I don't have that, I might think that price is more seriously above it than it really is. So I like to use the range as an indication of a wider zone. It's not to scale in, no. But it is to understand that this pullback is sufficient, this pullback is sufficient, and even this one. So on the pound USD, if price gets back to the 21 EMA, hits the 21 EMA, the 8 EMA turns, and then price turns back like this, I think it's a good short because we had a lot of candles below it. So there's a decent chance of a continuation here. Same for the 4-hour chart. We got a couple of candles below it. So once it gets back to the 21 EMA on the 4-hour chart and then turns, that could again be a decent potential there. Now on the pound USD, we had an interesting spot because from a daily chart, because price went back to the 21 EMA, right? And price has gone flat like this. 21 EMA kind of, it's almost flat for a couple of candles, and now we see the 8 EMA turning down again. So this could be becoming a bigger breakout on the daily chart as well. Let's see, but that's possible. Great, Beverly. Good to hear that you have that. Not a problem at all. I could have sent it again. It's just indeed had the feeling I sent it earlier, but no problem at all. I think it's useful for anyone who wants to use moving averages. I'm personally a big fan, as you can see, because it makes, I think, everything so much easier to digest. We don't have to. It's just easier I think, for the brain and the eye to pick up, what's going on when using the coloring and therefore seeing the angle. So I like it a lot. So anyone who can use it and likes it, I gladly give it to it because I think it makes moving average trading a lot easier. All right, no questions. Otherwise, please let me know if you do. So with that said, now we can maybe take a look at some charts. You can see that basically, 4-hour chart on the Aussie, well, it's nothing special, is it? How was the euro yen? Yep, that was the setup we were talking about yesterday, wasn't it? Right? We got price moving away from the 21 EMA with a lot of candles here. Sorry, 12 candles. Price moving back to the 21 EMA. No significant break, just a couple of candles that turned to 21 flat, but nothing significant. And then the first one here with the 8 EMA turning, it was the breakout candle. That was a setup yesterday. Same for the pound yen. Same for the dollar yen. Those are all similar setups. Now we're getting a bit of rejection, so who knows, but that was the entry at least yesterday. Euro dollar, we can see now that the 21 EMA is down, but it's also above the 144, so it's a bit of a mixture there. Let's take a look at the Kiwi. All right. So for our chart, mixture, right? Moving averages on top of each other. Dollar CAD aligned to the downside, but we don't have any significant momentum. Well, we had it perhaps here, right? But this particular entry didn't go anywhere, as you can see, or right here. So that would have been maybe a losing entry. But also we have to consider that there's not a lot of space between the 144 and 21. The 21 did, was bullish for quite a while, so maybe could be of things to consider. But even if the trade was taken, that can happen. Here we did not have a significant move below the 21 EMA, I would say, because we had 4 candles or 5 here, and then we touched it already. So I would not consider that. This was a good one under Euro Pound. Yes, the entry is the 8 EMA turning back into the same direction as the 21 and preferably 144. This was a mess here, so I wouldn't really consider that. And you can see prices basically bouncing off to 144, but again we have things not aligned. You see, all the basis is price moving away from the 21 EMA, and if you don't have that, like here, you're not getting an area where this is on a 4-hour chart at least, right, where it's worth trading, right? Because you can see price is just hanging around that 21 EMA, so it doesn't align itself for a setup. So we need a good momentum before this particular strategy is available. And on some pairs we just don't have it. Some pairs are just not trending enough. And you can see a couple of examples right there. The yen was in a good move, right? So perhaps the CAD yen. You see that was yesterday, right? So when you're analyzing or scanning for something like that, sometimes you can be pretty quick with some pairs, because you can say, okay, price didn't move away from the 21 EMA enough, so easy skip, right? In this case, well, we got a couple of candles below the 21 EMA, so if it does move back on the pound CAD to the 21 EMA and turns, the pound CAD could be on our list, right? Because we have the things aligned, price below 21, 21 below the 144, price not hitting the 21 for more than 5 candles. So if price gets back to the 21 and then turns at the 21, and the 8 EMA, I should say, turns at the 21, that could be a short setup that is valid on the pound CAD. Yes, this webinar is recorded, by the way. So, pound CAD, check, could be on the list, but we know that pound New Zealand, not on the list for the moment because its price hasn't escaped the 21 EMA yet. So that's how we could do that. Any other questions, by the way? This is how the chart looks like with only one moving average, but you can see it looks different. And it's not bad, but personally, I like the bands more. And sometimes I use the single EMAs just because I think that for the viewer it could be more comfortable and a bit more clarity. But I like this personally a lot more. Yeah, it definitely looks, of course, less messy with one EMA. But for me, I like the value. When I look at the charts, I prefer this because it gives me more information and it gives me a bit more structure to the chart. So I like that. But it can look messier for viewers, I can imagine. Well, the long term, it's not as important that it's a zone, more or less than just yeah. It's that's because of simplicity as well. Basically, I could use multiple threes as well, but in my opinion, then I'm getting a trade-off where I have maybe a bit more information, but it becomes messier and messier. So I prefer to have like 3-2-1 because it seems for me it's just a question of pleasantness how when looking myself at the charts. The targets, yeah, that could be fib sequences. It could be fib targets indeed. Fib targets are always very prominently a part of my targeting. Previous daily support or resistance when using 4-hour charts, even weekly pivot points or confluence of those. So that's where I do a bit of a discretionary mapping and then say, okay, this zone looks the best. Alrighty, folks. Well, tonight Nana is going to take a look at the channel bounce trading. You can find that right here, 5 p.m. GMT time, channel bounces, trading system part 2. And then let's take a look at the second part of that, the system strategy explanation. Next week, we'll be back with the usual webinars on Monday, Tuesday, Wednesday, Thursday. But this week, later this week on Friday, we got a special webinar and seminar at a Forex Expo in London, in fact. So you can join live online as well. That's going to be Friday at 12:15 p.m. GMT time. So 1:15 p.m. Central European time. So I hope to see you or hope that you'll be there as well. Thank you so much, Beverly. You can join online. That's a good question. Let me quickly look that up for you and for others that might be interested. I will find the link in just a second. Once again, if you're interested in this moving average indicator, you can just send me an email. You get it for free. How's the trading going so far as I try to attempt to get the link to join? Is your trading going well so far this year? We've been 6-7 weeks in the new year. All right, there we go. This is the link. Now that's a bit of a complication to write that down, so let me paste it in our chat right here. Okay, that's good, Beverly. I think slow but steady is always a good good approach. Consistent and trying not to wreck the boat. That's always very important. So good job. That's the link right there. And you just need to write your name and email, just the basic things, and you can register for uh, the webinars here. As you can see, you actually register for more of them. There's the whole day, but ours is this one right here. All right, folks, thanks so much for joining, and wish you good trading today, and hope to see you soon. Cheers.